Welcome to the third and final session on contributions to retirement. And this is if the taxpayer or spouse makes a Roth IRA contribution. If you remember in our discussion on IRA contribution limits, the Roth IRA limits are exactly the same. $5,500 per taxpayer or spouse, $11,000 for both, and then an increase if they're 50 or older. And that limit is not a separate limit from regular IRAs. It includes both Roth and regular IRAs in the same limit. And some of the rules are the same. You can only make a contribution to a Roth IRA if you have taxable compensation, which includes W-2 income, self-employment income, and alimony income. It does not include interest, dividends, Social Security, pensions. If you're not working, you can't make a contribution. Again, you can use the total of the taxpayer and spouse to determine how much you can contribute. And if the spouse is not working, the taxpayer can still contribute to the non-working spouse Roth IRA. One exception from an IRA, you can continue to make contributions past 70 and a half at the end of the year, as long as you've got taxable compensation. And the reason for this is you don't have to take money out of your Roth IRA when you reach 70 and a half. You don't have to do that. So you can continue to make contributions. And the reason, again, the contributions are not tax deductible. There is no Roth IRA contribution credit as there was an IRA contribution credit. You don't get a credit for making a contribution to a Roth IRA. Now here's the income limitations. In this case, we're not worried about whether the taxpayer or spouse has a retirement plan. If you're married filing jointly, you can make a Roth contribution if your income is less than $178,000. Notice here's a good one. If you're married filing separately, but you're still living in the same house with your spouse, you can't make a contribution. So another disadvantage of married filing separately. Now, we said there's no Roth IRA contribution credit, but as we said in an earlier session, you can still qualify for the retirement savings contribution credit if you're under the income limitations of that credit. So you can go to an 8880. But again, to reiterate, there's no reduction of income as there is in an IRA contribution. All you can hopefully get is potentially a retirement savings contribution credit. So to do that, you go to Credits, and you go to the Retirement Savings Credit. Now, in this case, we didn't enter the contribution anywhere in TaxSlayer. It wasn't on a W-2. It's not an IRA. So you have to enter it directly on the 8880 in this case. So you key it in here for the taxpayer, and you have a companion section for the spouse. And again, you have to worry about were there any distributions on a 1099-R, and they would go in here. And this is where it calculates. They made a $5,000 Roth IRA contribution. Again, they don't get a credit for it, but they came under the retirement savings income limit, so they did get a retirement savings contribution credit, which will reduce their tax, provided they owe some tax. So Roth IRAs are a little bit simpler to do. You can do the 8880. You can either remember the income limits for the retirement savings contribution credit, or just go in, if they say they contributed to a Roth, just go in and fill in the entry on the 8880 and see how it shakes out, if they get a credit or not. And that's it for the Roth IRA, and that's the end of our retirement contribution sessions.